Hi, my name is Nur Anis Farhana Muhammad Noor from BA1145C. My ID number is 2019-239396. The subject of my presentation is the flow and process investing in bonds. I will start off by explaining how are bonds traded or buying and selling of bonds. When the issuer first offers new issues, that first trading is done at the primary market. Subsequently, the bonds bought from the issuer can be bought and sold among other investors, and this is referred to as the secondary market. The trading of the bonds in the secondary market creates a market pricing of the bonds that depend on the supply and demands of the bonds and prevailing interest rate among other factors. Generally, bond may be purchased either directly to the issuer via primary market or through the secondary market. The bondholder may hold the bond till maturity or sell it in the secondary market. Primary market. Investors are effectively purchase bond directly from issuer in the primary market. For corporate debt, banks normally act as facility agent or lead arranger for the companies, while for government bond, Bank Negara will issue on behalf of the government through the principal dealer network. Investors can purchase these government bonds only from principal dealer in the primary market. For the secondary market is the financial market for trading of bonds that have already been issued in the primary market. Retail investors may buy or sell both government and corporate bonds from or to any banks or principal dealer. After that, I will move on to explaining the process of investing in bonds. First thing first, you must consider your financial goal. When considering your financial goals, you need to lay them all out as precisely as you can, as time frames and risk-taking vary depending on them. So if you would like to conservatively invest money to make a major purchase within the next few years, consider a short-term bond. That way, you maintain your principal or par value without much risk. Second, set up a brokerage account. Investors can purchase bonds with the help of an investment representative who will facilitate the buying and selling of financial securities between a buyer and seller. The investment representative's firm is in communication with governments and companies that want to issue debt. They also have access to secondary bond markets. Third, check the bond's rating. Before placing an order, an investor must know and consider the credit rating of the bond. Credit rating is the ability of the bond issuer to make all required interest payments and to repay the principal balance on time. This is extremely important as it determines the risk of that particular bond. They must know how the ratings work. How are the bonds rated? Next, place an order. Once you decide on a bond, a brokerage firm can place an order for you. If there are new offerings available, investor can buy a bond when it is issued or through the secondary market. Lastly, selling your bond. When you have bought your bond, you can either hold on to it or sell it on the secondary market. Investors usually choose to sell their bonds if they no longer need the fixed income and if the bond's price has changed to their favor. As they are placed on a secondary market, bond prices can change according to market force, allowing for an investor to redeem the bond at a premium. That's all for me. Thank you.